I'm Dylan Ratigan. I've interviewed nearly every CEO and most world leaders during the past 25 years. And now on Bootstrapping, I'm turning my attention to the new CEOs and the irrepressible entrepreneurs leading the next generation of innovation in the world. Welcome back to Tasty Live. I am Dylan Ratigan. Andrew Durgee, our guest. He's an executive vice president with our friends over at Republic, specifically serving as their managing director, managing the crypto portion of their business. Background for you, Republic is a platform that allows smaller investors and smaller companies to raise money in the fashion that a private equity firm might do it with a larger company, but with a smaller deal size. And that's relevant because there's a widespread belief that crypto and more broadly tokenization is something that's going to be happening across all asset classes. And what could be more ripe for tokenization than small private investments in privately held companies? I'm sure Andrew is going to say nothing could be better than that, although some people might argue it's more fun to put it into a racehorse or something like this, but that's for a different day. Andrew, it's a pleasure and nice to meet you.
Dylan, super happy to be here and really excited for our conversation today.
Okay. So I'm going to start at the end, which is your vision is that companies and individuals will be able to transact capital and the equivalency of equity ownership using crypto.
Yeah, I think we certainly believe that we're going to be moving towards a tokenized world if we're not already. These seemingly the evolution of securities and equities of how we look at them now, and creating additional layers of efficiency and feature sets associated with those securities or equities really creates an innovative environment. And we can talk about some examples. Like if you were to look simply at just an Apple stock, right? If you have Apple stock here and it is a financial instrument and you hope that there's some level of return that comes from it. But once you have the ability to tokenize one of these frameworks, one of these securities, you can add feature sets to it. And an example of that would be something like royalties. So at Republic, we're tokenizing the royalties of songs and albums, artists, and we have the ability to sell those royalties in a tokenized framework to their fans. And they have the ability now to raise capital from their fan base, and their fan base can now participate in the financial upside of the success of those properties. Now, again, that's just the digitization of an instrument, but when it's tokenized, we can add feature sets. Like if you have a certain amount of those tokens, you get early access to music, or maybe you meet the artist, or early access to concerts. And this starts to create this evolution of how we're looking at securities now. So we're really excited about that space, especially as it applies to culture, because it's very retail oriented. And we think the retail space is one that is ripe for that type of adoption. And we've seen it in all the different of these types of projects that we've been rolling out.
And where are we in that process now? Like if I wanted to buy the royalties of, I don't know, Pink Floyd right now, can I do that?
So Pink Floyd or who, I'm not sure who owns the catalog or masters of Pink Floyd. It's not currently one of our clients, but we do have a number of clients, including large music catalogs. And you'll be starting to see names that you certainly know rolling out in the tokenized framework later this year, particularly in Q4. So we're really excited about what that will look like, and what that will mean for the space. And remember, when we're looking at something like that, this is built entirely on 1930s securities law. So we're not venturing into aspects of regulatory gray areas. This is exactly how SEC wants us to operate, at least for the time being. I think that there may be some changes coming, hopefully, down the road. But for us, the way that we're operating, completely compliant, we're entirely in the United States, completely U.S. regulated, been formally and informally audited over 50 times, cited hundreds of times. So the way that we approach these things from a compliance standpoint is not how you would look at necessary other Web3 businesses or other Web3 companies.
But again, to my question, where are we in the process? If I wanted to use crypto or a token to buy into a Republic listing of any kind, is that possible?
Yeah, you can go on republic.com now, and those opportunities are regularly popping up on our retail platform.
But music is still to come. I'm just distinguishing between crypto
Oh,
tokenized investment on
yeah.
Republic and
No,
tokenized investment in music.
yeah, no, we've done music. No, the music
Okay.
offerings are there. I'm more so relating to Pink Floyd,
Oh,
which
to
I
this,
would love to tokenize if they happen to be listening. But just some of those larger offerings and larger artists are coming down the pipe here over the next couple months.
Mm-hmm. And how are you able to sell securities or rights or royalties or financial assets, financial obligations, payment streams, whatever it is, for crypto as a tokenized asset in the United States in compliance with the Securities and Exchange Commission at the same time that the Securities and Exchange Commission is trying to shut down Coinbase?
So one of Coinbase's problems is they aren't registered, right? If you read the recent lawsuit, a lot of it is focused around the fact that they aren't a registered broker-dealer and they haven't registered their activities. Everything that we do at Republic is registered. Those offerings are done through a variety of exemption frameworks such as Reg A+, Reg CF, Reg D, Reg S, and all of these offerings that we do, whether or not you may look at them as a utility or security feature, we are registering them as securities. So that is a big differentiator between us and something like a Coinbase.
So you function as a registered broker dealer, as sure as any other registered broker dealer.
Oh yeah, yep. We our friends over at FINRA. We have great relationships with the regulators, and that's how Republic was built. We were built on those types of regulatory frameworks. Republic is really a marriage of legal engineering and technical engineering. As a business, that's how we sit.
Mm-hmm. And if you were to look at your reference to the 1930s securities laws, and then it's easy to criticize all of these laws and certainly reference their, all outdated and whatever. But let's look at least from an intent, some of the best aspects of those laws, or one of the best aspects of those laws, is of something that's referred to as blue sky laws, which is to prevent an individual or a group of individuals or an institution from selling so-called blue sky, nothing, right? Where you're buying stock in nothing. And that was a concern from the markets of the 1920s and the 1930s. Laws, in theory, very much in theory sometimes, but in theory set out to make sure that the securities that were being sold were actually legal obligations that were attached to actual enterprises with actual bank accounts and accounting and things. When you're dealing with small private companies, it becomes almost impossible sometimes to know, there's no quarterly reports, there's none of that, there's none of those dynamics. So how do you ensure whether it's a music royalty deal or whether it's a small company that makes pens, I'm holding a pen, or a water bottle company or something, and you're selling a tokenized stake or interest in that company? How does Republic or how does the law ensure that pen company or that water bottle company is actually a company as opposed to just a story to sell stock?
Yeah, no, that's the right way to look at it. I mean, most of those laws in the 30s were built around consumer protection, right? Came out of the Great Depression. People were selling blank pieces of paper with nothing behind it, and they didn't want to go through that type of pain again. So most of the laws are centered around those frameworks. But that being said, if you touch retail investors in the US, you still have to provide disclosures. And in fact, you also have to do reporting. Now, the reporting may not be the same that you see as a full-blown public company, but you are required to provide certain levels of information, certain levels of annual reporting. So if you do something through either a Reg CF exemption or a Reg CF framework or a Reg A plus framework, those certainly have disclosures and reporting associated with them. Now, if you're doing an offer that's simply a Reg D or Reg S, Reg D is for those that don't know, is focused on accredited U.S.-based accredited investors, and Reg S is based off is for offshore investors. Those all have different levels of requirements that are certainly less stringent than something that touches U.S. retail investors. So when we do deals that run through our broker dealer, they have to go through series of diligence and series of questions. and that information is then provided to the investors on our platform. So there's certainly more than blank paper. They have very clear understanding of what it is that they are investing in, what they are participating in, and it has gone through a series of checks through our broker dealer or through our open deal portal license. So those things, us being an intermediate, a qualified and registered intermediary, creates that additional level of security and protection for the consumers.
And then does Republic or any broker dealer similar to Republic that was offering the same product that you're offering, assuming even such a thing exists, does Republic wear the legal liability? Like who's liable if that if that doesn't, if that's not
So,
like, in other words, if I buy a tokenized piece of stock on Republic and I'm told that it's cleared through whatever it's been cleared through, and then it comes out that there was nothing there, obviously there's liability for the company that was selling the nothing, but is there also liability for the broker dealer, in this case, Republic?
You would lose your broker dealer license, right? So, and that's something that is highly scrutinized, especially for a business like ourselves, because we're at the fringe. We're pushing the innovation or in this space. Like I said, we've been formally and informally audited now over 50 times. And so they're keeping a very close eye on how we're operating and learning from how we're operating in order to make sure that we are operating from a compliance standpoint and are protecting investors appropriately.
Mm-hmm. And how burdensome is that? In other words, do you feel like that sounds to me like an absolute nightmare?
I mean, I would prefer it not to be. But when you are at the cusp, you're at tip of the spear. That's the cost of doing business. And ultimately, the goal is that we can create more room and swimming lanes for others behind us that can also continue to move in this direction, and also provide similar types of offerings. There's so much opportunities, more than we can do on our own. And so, we welcome others to come along that path with us.
Mm-hmm. And I know, speaking of others coming along that path with you, I know that one of the key features at Republic and Republic's crypto is something that you call the Republic Note, which amounts to a crypto. Don't hold the words against me, but I'm going to call it a crypto, a tokenized fund that allocates across a portfolio of private startups. Is that a fair way to describe it? That's my understanding of it.
Yeah. Let me kind of rejigger that, actually. So what it actually represents is we take a portion of our profits, and depending on from which product and which service, but let's just say roughly 20% of our profits, we put those into the note. Once that hits a certain limit, then that is distributed amongst the note holders. So it's the first of its kind. It's meant to be a framework that allows us to democratize finance even further, and
so it's an interest in the profits of the exchange itself, not in, and then the exchange has a business. The more the exchange produces these companies and these deals, the more profit it makes. And the Republic Note is a way to basically be invested in Republic.
So it's a way to be invested in companies that you may not otherwise be able to be. So I'll give you an example. Republic, we're an RIA, a registered investment advisor, and so we have a series of funds and SPVs that sit under there. So we've done investments in things like SpaceX, for example. Well, if you're not an accredited investor, there's no scenario where you could go do pre-IPO SpaceX, right? It's impossible. But if you are a retail investor and you hold a portion of the note, you will be getting returns from the performance of SpaceX because we have a position in it, right? So when we take profits from that, then we move those profits into the note, and that allows every regular person from Des Moines, Iowa to Reno, Nevada, can still participate in the upside of these properties that otherwise they would never be able to touch. And that's really the mission behind Republic, is to democratize finance is to a level that we haven't seen before. Like I personally have a lot of issues with the U.S. accreditation system, and we're trying constantly to kind of push the envelope there. And this is a compliant way to allow retail non-accredited investors to be able to participate in the upside of these things that they otherwise wouldn't be able to touch.
And is there visibility for if I buy a piece of the Republic Note, is there visibility to the Republic Note portfolio? How would I know that you have space?
Yeah, because we originally we were trying to get it approved with the SEC as a Reg A plus, which has proven to have been difficult. We're almost 4 years now in the application process with dozens of, well, maybe not dozens, but over a dozen turns back and forth to try to get it approved. Ultimately, we decided that we are going to do a Reg CF offering with it instead, and so it will be able to be traded publicly. But when the moment that we do that, whether it's a Reg CF or Reg A plus, again, we have reporting and disclosures and annual portfolio reports that we have to provide. So yes, full transparency to all of the note holders.
Mm-hmm. And is there one asset class that you think is particularly ripe for tokenization for the retail community?
Yeah, when we look at tokenization for retail, I think culture is a really, really powerful one, because it's something that I find is probably highly undervalued. I think music is highly undervalued as an example. It's why an area that we're moving into. There's very few people that can go buy masters and but truly buy music, right? So right now you have private equity firms going up and buying all these catalogs, spending hundreds, if not billions of dollars to do so. And there's only a handful of those companies that can do that. So that overall depresses the price. When you have the ability to have retail participate and retail own it, you start to do actually real price discovery to see what that asset is really worth, right? You mentioned Pink Floyd, right? You may love The Wall. Same with me. I have it literally right here. But what a private equity firm would pay to own a portion of The Wall and what you would pay are probably very, very different, right? And you would probably pay a premium because you're a fan. It's not just a financial instrument to you. It's something that you want to be a part of. It's something that you want to engage with. And so when we look at tokenization, things that retail wants to touch or is interested in is where I think you see it first. Music, film, sports, all at the top of the list.
Mm-hmm. And does that include buying? I mean, do you think there's a world where an athlete may sell an interest in their own future earnings?
Has happened.
Or a music, or just going to your culture, or a movie star, or whoever. Yeah. So any cultural aspirant.
Yeah. So we like when you look at culture in general, I'm using kind of these three big examples, but it goes obviously far, far deeper than that. Like emerging artists, the ability for emerging artists to be able to finance their works with their fan base is really, really powerful. Like, we'll go back to music again. If you look at, let's say an artist maybe has about 5,000 fans, right? And they're relatively new, right? And they might not want to pay Sony Music 80% of the royalties for the rest of their life, right? They have the ability to come to Republic, do a music financing offer through us that their fans can participate in, raise $5 million, make their album, and now the fans own a portion of the royalties. So not only are they your fans, but now they're advocates. They want the music to be successful. They want the album to be successful. They're tweeting and TikToking and marketing the content for you. And as the song and the album gets more popular, they make more money, right? Mm-hmm. And so now they're part of the journey with that emerging artist. And we find that to be really interesting. And what's really powerful about that is it's borderless, right? Music is loved globally. So this can be done in Saudi Arabia, can be done in Brazil, can be done in the US. And that's a really, really powerful a tool for change going forward.
It'd be fun to do a partnership with someone like Eurovision, where you actually, like these huge contests where, anyway, I for sure certainly from a conference room discussion standpoint, I can't think of a more fun meeting than trying to scheme up ways to do tokenized retail deals within the music industry. That's a fun meeting. I don't know if it's a good business yet or not.
Well, I think that we'll be the ones that prove that out here in the relative short medium term. Yeah. Mm-hmm.
Where are you in that progression? In other words, if there's an artist with 5,000 people, a college band with 5,000 followers in Santa Barbara or wherever, could that has anybody done that?
Yeah, we've done it. Yeah, we've done it already. So yeah, call us up. Yeah. Dylan, I know you got that garage band on the side, man. Come on.
We'll fire it up. And then how do you do the valuation? In other words, how do you determine what percentage of my garage band's earnings am I selling in your deal?
Yeah.
And who decides?
Yeah, no, it's a great question. So as it goes through the broker dealer process, like that's part of the vetting, the due diligence framework, valuation, that all rolled in together.
And but so Republic advises the band or whoever the principal holder in the process.
Yeah, but so they may come to us with one expectation, and maybe that's fine. Or we'll say, hey, listen, you know, through our
Because I'll
research,
say I want to sell 20% of my lifetime earnings for $5 million.
right, and we'll be like,
And
nah,
you'd say, well, it's probably maybe like $1 million. Like if you're
yeah,
lucky, it's not
yeah,
that good or whatever.
that's
And
right.
that's a discussion you would have with someone at Republic.
Yep, exactly.
And what about the tokenization of, like, again, racehorses, or, in the sports world, a golfer, a quarterback prospect
Yeah.
in Texas?
What one of my ultimate fantasies for sports tokenization, we've gotten close to it now a couple times, but it hasn't happened yet, is I really want to tokenize a sports franchise. I'd love to do like an EPL team or a football club somewhere. Um, Again, sports franchises highly undervalued, right? Because there's only a handful of people that can buy them. There's like, only a couple billionaires that can go out there and buy holistically an entire sports franchise. But if you were to take $1 billion sports franchise, sell 10% of it to the fan base, right? Let's say it's $1 billion sports franchise. We're going to tokenize 100 million of it. We're going to sell 100 million tokens out to the fans. And there's no voting rights, there's no IP rights, but you have royalty rights, and something like if you own a certain amount of tokens, you can meet the players, or you get early access to tickets or swag or whatever it may be, merchandise.
Never ends, sure.
Right, never ends. And now, if you're a fan of that football club, you're like a crazy fan of that football club, right? And it's sold at $1. We know the valuation. We know that it's worth $1 billion, and we sell 100 million of it. As a fan, what are you going to pay for that? You already know that it's hard set at $1 billion. Are you going to pay $1 token, $2 token, $3 token? And now all of a sudden, five.
Yeah.
Now the franchise is worth $5 billion. And if you're this franchise owner, now all of a sudden you just unlocked $4 billion new dollars of valuation that you can borrow on, lean on, whichever, right? And that's a very, 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 very powerful tool. And that is coming. That is coming. So stay tuned. That's one of my like big fantasy projects, is to get one of these sports franchises.
And so what is the greatest barrier to moving forward? I'm not even going to ask, because I'm sure the greatest barrier must be regulatory. And so then what is the current regulatory barrier, and what is the prognosis to navigate it?
Yeah, I mean, on sports franchises, it actually depends on the leagues. So, there's sports franchises that are public companies, right? There's Manchester United or whatever, which is it's a publicly traded company. So
And
there
Green Bay is probably the most famous, right? Like,
yeah, but like it is, but not in the sense that as a shareholder, you're not making anything. But
yeah.
But yes, Green Bay is a famous one. But they're grandfathered in because the NFL limits how many how many people can sit on the cap table. So yeah, so NFL would never, at least in its current iteration,
never fly.
It did just loosen it recently for some of the private equity firms that have a bunch of LPs and make it a little bit more clear. But NFL is not probably the first place you're going to see that happen. It's going to be somewhere else. But the regulatory issues related to something like that actually are not that difficult, because again, that is a security. That is a plain security. We're not talking about any gray area type of thing. And so there's decades and decades of pre-existing laws and frameworks that allow for those to happen. It's really more at the management level. The issues more occur at the management level of the individual leagues.
But what about an individual? A young quarterback prospect, or a young I'm 12 years old instead of 51 years old, and I'm showing promise as a ice hockey player. Can I sell an interest in my future income as a hockey player?
So it got really close. There's an NBA player called Spencer Dinwiddie. At the time, he was playing for the Brooklyn Nets. I'm not sure where he is now, but he wanted to sell a portion of the futures of his contract as royalties, or as a token, and he did get very, very close to doing it. I think it's a matter of getting the leagues comfortable with that type of activity, and also there's got to understand in the leagues, there's multiple governor levels of governing. So there's like the players association, there's the leagues association, there's the owners. And so it can be complicated to get everyone on
But the
board.
point is, it's not even up to the 12-year-old or the
Correct.
12-year-old's family. So even
Correct.
if the 12-year-old or the 12-year-old's family want to do it, if they ever actually got a contract in the professional sports league as it stands now, they could not legally assign a portion of that income to some prior structure.
In the leagues, no. But things like where we are seeing it coming are like boxers, MMA fighters, where they are really, they represent themselves.
Okay.
That is coming. That is happening.
Okay.
And those are active conversations now. Yeah.
Okay. If you could change one law, if you had a magic wand that could expedite one regulatory series, what would it be?
Oof. Oh man. All right. Well, I'm gonna give you two answers if you let me. All right.
Please.
First off, even though my crypto community probably won't love this answer, but the accreditation system in the US is such a problem and such a gating item for and creates so much class disparity. I would really overhaul the U.S. accreditation system. I know that's not crypto specific, and I definitely live in. I am a crypto specific person, but that is such a sweeping issue that transcends, I think, industry. So that would probably be my first choice. But there's one that's a little bit
And
more.
and just to clarify for folks who may not know, what you're speaking to is the fact that almost all private investment, any investment like this, is legally unavailable to someone who doesn't have whatever, at least I think it's $1 million of non-house, like of non-primary residence liquidity, and at least some number of hundreds of thousands of dollars in income. And basically it eliminates the vast majority of individuals.
Yeah. The hard numbers are you need to have 2,000. You need to be making $2,000 a year in salary,
200.
200,000, and
Yeah.
or have $1 million in liquidity, not including your home. And so that's not a lot of people in the US. I mean, that really limits you, right? And we all know that the biggest upside takes place in investments before the IPO. In fact, most of the IPOs in the past 10 years have just punished retail investors. So it creates just further wealth gaps and further disparity. Meanwhile, you can go to Vegas and, mortgage your whole house and put it on black. No one seems to care about that. It doesn't make sense to me. And I'm not saying that there shouldn't be some levels of protection and care taken, but that's something that should be addressed. So anyway, that would be my immediate larger U.S. mission. But one that's a little bit more topical is, so I testified to Congress a couple of weeks ago in one of the first one of the rare dual committee hearings with the Agriculture Committee and the Financial Services Committee. And when I testified, I submitted a written written testimony prior to my oral testimony, and a portion of that testimony is now being added to the first U.S. proposed regulatory bill for crypto. And now it's been overshadowed quite heavily by what's happening with Coinbase and some things in the market. But last Friday, it got published for comment. And that is something, if I could fast track, that would be one of the things that I would fast track. Maybe you can put a link to it somewhere so people can take a look at it. It is pretty.
We'll do that.
Yeah.
Yeah. It's an absolute pleasure. I wish you all the best. I want to learn more. I want to see more. I completely and totally agree with what you guys are doing. And I think it's thrilling. I think it's a good thing for the world. So, Andrew Durgee, the name, Republic, the business, tokenized Pink Floyd, coming to a crypto wallet near you soon, if only in our dreams. You're watching Bootstrapping. I am Dylan Ratigan. More Tasty Live after this.